Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Thursday, March 9th, 2023. Great day. Great trading day, and that would basically include both directions. A very revealing day, a day where the count fit to a T to what I saw, and I was able to update the charts. I'm going to start here on the 4-hour chart in the S&P. Kind of a lot to go over, so we're going to try to keep this all into one side here. There is a lot going on, and right now it is basically economic and market. To the big news for me, when we're looking at what could be a catalyst for a third wave, what could be a catalyst that could explode and exponentially just grow very, very quickly. And then that is what we saw take place out here on the West Coast in the state of California, down in Silicon Valley, where we saw Silverback Capital, which is a bank, crypto, fold, close its doors, shut down. And then we saw Silicon Valley Bank try to get some emergency money because of what the stock getting hit. Now, mind you that the stock closed yesterday at $268, and today it was trading under 100. So that's a collapse. That's serious. Silicon Valley Bank is a very large venture capital bank. So having sudden withdrawals and the collapse of that bank throws a lot of things into the air, and how they end up landing, we don't know. So yes, we have some serious things. Plus the president coming on and talking about his plan, how he's going to feed the budget, how he's going to make budget, how he's going to pay for things. Excuse me. And part of that is increasing taxes on, yes, unearned income. So in other words, it's like unclaimed, or however, when you have a P&L, unrealized, so you can't continue to carry it because you just haven't taken it. So you're going to be taxed on your unrealized P&L, unrealized profit. So what could that exponentially just grow out into? Well, I don't feel like paying that. So when is that tax going to pass? How long is it going to be? Even though in our minds we know, or we think, government can't, they're not going to do that. Particularly one side of our government is just funded by corporations to prevent exactly what now is being confronting them. It's like, guys, for years and years and years and years and years and years, you have not paid. The whole internet grew. The whole .com thing grew because there weren't a lot of tax consequences. Then it kind of caught on. Now they got to pay sales tax. But as long as corporate tax, because it continues to roll. They grow. They become huge, like mammoth corporations. So now it's come times like, well, you kind of could pay, or start paying now, particularly when you're talking about a company or a firm that is making $1 billion or multi-billion dollars in a quarter. Maybe they're making over $1 trillion in a year, or their capitalization, their cap is $2 trillion, aka via the price of the stock. For example, Apple. These are, how much are they not contributing to local, state, federal, whatever the situation might be? Where would we be? So they have lobbyists. There's all kinds of things. Everybody knows about that stuff. I'm not going to go into that, but it's out there. It's now being put out there. It's now going to be legislative in its various forms. And maybe it won't be exactly what you asked for, but ask for the moon and accept less. Because if you get something passed, then you have moved forward on your agenda. Political, we're going to leave it out the door. Back at the ranch, we're beginning to see the cracks become a little bit bigger. So we get back to a point where why on God's green earth do you think it's okay, or should you be holding an index, for example, the S&P above 3,900? When, for whatever reason, you think it should be valued there versus last October, and we have more information than we did last October that brought it down here. Now, this was all like Fed's going to pivot, Fed's going to stop raising. There's our low, October lows, October lows, October lows. We build on that. It's like, okay, we did. The move is done. The next down cycle is going to begin. Why? What has changed since here? The situation has gotten worse. The next layer has opened up. We are seeing things now that were only discussed then as possibilities. Now the possibilities are reining in. This is the 4-hour chart. The Elliott, you can see. So what I have put in there in terms of Fibonacci is our first layer. What will that C wave look like? What can we expect? First of all, you would expect that it's going to break the low of October 2022. That's part of the plan. When the C wave is done, the October 2022 low should have been broken. What was our first level? 3361, 3300. Oh my God, we're going to die. That's the first level, bringing it down. It has additional capabilities, but I'm finding that ultimately I would look likely in the area of 3166 down to 2980. And then I'm expecting a pretty hefty duty rally. A whole bunch of factors are going to be in control, but we have got stuff right now that's real and it's on the table and needs to be looked at. Not be thinking about, well, he's talking about all the way down there. I guess I can hold on. It's like, I have no idea why you'd want to. Why you would want to hold on to something you bought here and watch it go down to here instead of just getting out, selling it, riding it short down to there. I mean, if you're into that, there's going to be a lot of trading. That's a big picture. 4-hour chart, still a big picture. This is August. That's the August high, October low. Here we have the February highs. So we can go from point to point to point. Those are the June highs. December highs. December highs, corrective. Part of the same correction, we got the February highs. That actually failed. I think they did. No, barely did not. So the February highs got above the June highs, and or December highs, excuse me. So anyway, A, B, we're in the C wave, intermediate C wave to complete primary wave A. So that's on a big picture. Understand that underneath all of that, we're in a 5-wave decline off of the 4186 high. And that was the February high. Now we're starting 5 waves down. 5 waves of minor degree. And I'm going to drop down to the hourly chart. So we're going to walk this all the way down because this is what I've been talking about. And I want to then get into what we just saw today. So here we are. There's the high of intermediate wave B. So we're in intermediate C wave. Inside that intermediate C wave will be 5 waves of minor degree. Here's minor wave 1. We know we completed minor wave 2. We got additional confirmation. You heard me speaking now for a couple of days when I am looking for several rounds of rejection. Round 1, round 2. And round 2 is not over. So I'm looking for 3 basic rounds of rejection separated by 2 rounds of, that's behind us. And then the next leg down. Sorry, that even caught me by surprise. Anyway, minor 1, minor 2, and now we are beginning to drop again. And remember, everything, we're counting down, so we're counting number-wise, and they're just different forms of the same number. So These are minute degree. This is the minor degree. We're looking for 5 in that color. We've got 2. We're in the beginning phases of this third wave. That will consist of 5 waves of minute degree. So we got minute 1 and minute 2, by the way, finished at right there on the opening. I think it could have been on the opening. Let me just double check. Go down to a 15-minute chart and let's take a peek. That was, yes. We went up and we made that high. We made that high this morning on the opening. Oh, my word. So let's just take a peek at what we did. 40-19, or let's just call it 40-20. The market topped this morning at the beginning of our session. We reached a low at 39.10. That's a big drop for the S&P. Nice big drop. Now, we'll get back into that, but we have 1, 2, 3. We saw that yesterday. 4, 5 wasn't pretty. A, B, nice. Now just conventional and a beautiful C wave. Finished. Then we started to drop. And remember, please, what I've discussed in what to look for. What to look for that's going to give us confirmation that we've dropped into the third wave. At that same time, I was not saying what is going to cause the third wave. Just this is what it'll look like. Whatever comes in to cause it, now we're getting confirmation that it is happening. And that's what did take place. There were several things that snuck into the news early. Besides 2 days of Mr. Powell goes to Washington, first to the Senate, then to the House. We had that. Now we got everything else added in. Then we get Silvergate collapse. Then we get Silicon Valley Bank. We tried to get a loan to help to seal up some leaks we got going on here of all the withdrawals. I don't think they found one. There's a run on the stock. Like I said, stock traded at closed at 268 yesterday. That was the high. And today, just before I switched out, it was trading below par, which is 100. It's trading below 100 in the after. So it's serious. Now, started to go down, and it didn't look back. It did not look back. This is a 15-minute chart. We got one 15-minute rally at 12:15. And then we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars down. 12 15-minute bars down. It was a move that you did just have to sit and watch because you wanted to be in and stay in. Even as a scalper, you'd move in, you scalped even more than you thought, you got out, you got back in, you scalped even more than you thought, you got out, et cetera, et cetera, et cetera. And there were plenty of opportunities to go down substantially, just getting wrong-footed somewhere and going down substantially and being able to turn it around, make it all back, and then make a whole lot more. That was all there today. But you had to have a strong mindset. You had to be able to just kind of sort through the chaos that's going to start swirling around. There's a lot of information. That's a lot of things that are going to be given that affect the options markets, that affect volatility, that affect interest rates. All of these things jump into motion, and all of them contribute to what happens to individual stocks. We saw in the NASDAQ today, which was up, which held higher levels for a great part of the day, and we'll talk about that as I get over there. But here in the S&P, what can we expect? Well, I'm going to start to build this out because I'm letting this roll all the way out before I'm going to put a 3 somewhere because it's going to be big. And we're getting the information that's going to be able to support it. So kind of what's coming in is that many factors that I don't want to use the word get ignored, but that's kind of what it feels like. that they're being looked at, but they're not being taken seriously. And one of them is the volatility. But the volatility itself is being readjusted or whatever. So we would think in a fall like we saw today that the VIX would be up more than it was up actually to something. This is after hours. It goes up another 6 cents. But you'd think that it would be more like at 23 or 24. But it's not. And that's okay. Individually, we're seeing a lot. Now, I'm going to stick with trying to put together what we can see for this third wave. So the first thing I'm going to do is I start here, and I'm going to add a drawing. Oops, and it's going to be those, and I'm going to take it down to the bottom of wave one. Come on. But it wants to play games. And then I'm going to go up to the top of wave two. All right. So now we have, what should wave three look like? Well, guess what? Right off the bat, in day one, it came down and it touched 100%. Okay. So now we already know that what we've done is equal to what we've done. But here we did it in one day. Here we did it in several hours. So anyway, I think we go much further. We're on the brink of breaking the 3,900, which again, as I've been talking about, I'm looking for another. I want this confirmation to me comes when we start breaking below 3,900. And I think we can go from 39 to 38 pretty quickly. That would only take us down to here. Now, what do we got here? This is for the larger C wave. So the larger C wave, can wave three come down to 382 of that larger C wave? It could, but I think we might get down to here, 1.618, 3840 to 3,800 on this one. On this one. A lot of things are going to happen because of what we've built up in these options, in these derivative markets. Tomorrow is an expiration across the board, across the board. And then March itself, the monthly, is going to be, I think, a quadruple. And that's the week after. So we got a lot coming in. And pricing is now going to have to be make adjustments. And yeah, it's going to get interesting. So I am looking for continued downside. I am looking for the market to come down into here. How I'm counting this on the inside of anything, if anything, 1, 2, 3, 4, 5, are small subminute wave one of minute wave three. Wave three is fully expected to subdivide more than once. This is the first subdivision, and to subdivide within it. Within that third, subdivide again, just like it did here. But I would expect when we get to the third, it'll subdivide again. So we're going to get several subdivisions as this thing rolls out. So we're looking for that down into here with the potential that we go down another 75, 76 points. If we do that tomorrow, well, we're sitting closer to 38 than we will be to 39. So remember what I said, it can go down and start dropping by 100. As it lurches its way down to where first strongest support shows up at 36.75. All right, cluster's gone, little hole, break and fill. We will fill that in because this will continue to grow and give us additional points as it works its way lower. So for right now, I would think that we have a fairly good chance, and I actually dropped this down to the 15-minute chart. We have a fairly good chance that, yep, looks like we're even getting it now. Maybe we can rally back up towards here, but we should put in additional legs down. Again, what happened out here with Silvergate and then Silicon Valley Bank is big because of the amount of capital that each one had. And each one, like the bank, how much did they have? And what, it's serious. So We'll see what happens. Moving averages, bing, bang, boom, all 15-minute. Let me go back out to that hour and let's take a look again. Again, here you go, folks. That's what I look for. That's what I look for to tell me we're in a third wave. I know it's kind of dramatic, but I got to be honest with you. This is what I look for. And this is on a minute level. So if I'm looking for it on a minor level, it's going to be bigger than all of this. These will all combine to offer something that looks like that, but on this degree. So over the several days, over a week, over 2 weeks or longer of going down. Okay, so now moving averages, see, they're all turning lower. And now look at them. Even the 50, quickly today on the hourly chart. The hourly 200 EMA turned lower. The 50 dropped below the 200 SMA, which is still going kind of flat. The 20, the 8, and the 4, nosediving. Boom, boom. One more, I'm going to go up. I'm going to go up to that daily because you need to see kind of what happened here on the daily chart. 200 EMA is still flat, but that's been broken. And got broken today. Got ticking right out. The 50, the 20 are pointing pretty strongly lower now because they got taken out as well. The 4 and the 8, hook, drop. So they're heading pretty sharply lower. And look how far down it closed. So it didn't just close just below, it closed way below. So the daily picture has turned negative for right now. Now, put that back on the 4-hour and go over to the NASDAQ. NASDAQ's doing the same thing, except I'm going to put a little bit bigger. I'm starting out here. Got the X wave, A, B. We're working on the C wave down. Open this up just a tad. See if I can make it a little bigger. There's the bottom of an A. Get an A, B, C up to put in the intermediate wave B. So intermediate wave A, intermediate wave B. And now we're working on the intermediate C wave down. Our first allocation for that, or fib sequence, comes in on that intermediate degree level. So this is what we're looking for the intermediate C wave. Wave C would be equal in length to wave A at 95.31. Acceptable. But that's where it would be equal. Minimum October lows should be taken out by wave C. And the October low was 10,484. Now, 10,484 below that. So we can come down to here, and it could stop there if it wanted to. But I think, no. I do believe it comes into here. We put in that C wave. It puts in primary wave A, and we do a nice, intense rally. Take that all back. Whole situation. So I'm talking about we could be going down for a while. We could be going down for a while. We'll have nice rallies. We'll have nice declines, but we're going to get down there. Or greater. Seriously, you got down to here. 1.618. C wave 1.618 of A? Pretty common. All of this would be common ground in terms of a Fibonacci. So that's just the start. Now let's go down to that hourly chart, because here again, wow, in the NASDAQ. First thing we did, and talk about rejection. So we hit our high at the top of the hour, 10 o'clock, at 12,353. Immediate, if not sooner, rejection. And the market just began to tumble, all the way down. A lot of it had to do with, well, let me just say, within the NASDAQ, Apple, AMD, Amazon, Google, Microsoft, Meta, NVIDIA, and Tesla. No, Tesla was down, NVIDIA was down. But that above group, strong strong, holding higher numbers, Microsoft in particular, holding like +5 or more. Then suddenly, Silicon Valley Bank, boom. It was a bombshell. That was the bombshell that got dropped. If somebody said to me today, okay, that's the canary in the coal mine. And I said, no, that's more like the hippopotamus in the coal mine, the elephant in the coal mine, the gorilla in the coal mine, something that big. That's what Silicon Valley Bank brought to the market, particularly the NASDAQ. And again, as I said, they hold a lot of venture capital. So it's serious. And all this stuff that with the other one is because of crypto, another crypto failure. So things are beginning to really heat up when you're looking for catalyst. And these are the ones that kind of been on the periphery. Well, it's out there, but hey, somebody's going to save it. Something will be okay. This will happen. That'll happen. Take note that when Silicon Valley Bank made their announcement, along with the other, JP Morgan down $7.46, Goldman Sachs down $7.20, Bank of America down, Citicorp down $2. Let me look at Bank of America. I don't have it up anymore. I took it off. Bank of America down. They all, Wells Fargo, they all went down. They fell, they went boom. Maybe it's still there. It is still here. Bank of America down $2. Citicorp down $2. It just went on and on and on, and it rattled right through the banks. So serious stuff. Once again, let me just say, when I talk about drop and don't look back, that's what I'm talking about. That's the announcement. Wave 3 is underway. So now I want to put in, what can wave 3 look like? So let me pull this back again. And now I'm going to continue to use the extensions, but now I'm going to go to the top. Oh, come on, just, no. Thank you. From the top down to the bottom of wave 1 to the top of wave 2. And now we see that, well, today we actually almost got down to 618. That's just off of this high. And I'm going to add another layer in a second to be more direct. So now we're looking at the minor third wave. Now the minor third wave, where wave minor 3 would be equal to minor 1 at 11,620. I'm like, meh. Yeah, it is below it, making a new low, but nah. It's the longest and the strongest. How about 11,000? Okay. Now, ultimately, the C wave, don't forget, 95.31 is where it projects to. That's a minimum. So we got a lot to go. In wave 3, overall, yes. 10,700, maybe even 10,000-ish, or down, come down, test that 10,400, whatever it was, level. Oh, good. We held the October low. Ping, and a wave 4, and boom, and a wave 5, right to there. All things are possible, right? Now, that's on the minor wave 3, but now we're inside of that. We're inside the minute wave 3. Well, what can it do? Well, I'm going to add another layer. I'm going to put, see, it always wants to fight me. Put that to there, and then I'm going to go down to the bottom of wave 1 to the top of wave 2. All right, it starts to get a little sketchy because you can see it's getting all wrapped up, but wave 3 has already come in 100% of wave 1. And that was today at 11,009, right at the lows that we had today. We get over there and I get to it. 11,977. We were smacking it on the nose where it's 100%. That was at 75. We got to 77. So we're getting there. We're getting there. But That's only equal. This is the longest and the strongest. And this one took from the 6th down to the 8th. So this took 2 days. We did this in 1 day. I think we still have more to go. Now, what would be next up? Well, we have 11,875, 11,831, 11,808. I think 11,800. We need to give it up. So we're talking just another 200. And what were we down today? 215. Pretty severe. Maybe we see a lot more because it's an expiration. Again, volatility zips up to through the nose. What has regained its status as top of the notch with volatility? Tesla. Tesla down 9. 172. Gee, weren't we just battling a week ago for between 200 and 210? Oh, that's all off the board now. All off the board. Stock's down $28 or more. Volatility is going to be high. What can the stock do tomorrow? Does this set up upset the apple cart of maybe larger firms that are thinking they're going to try to get it to 4,000 in the S&P or here back above 12,200? Maybe. Or do they adjust, and did they adjust today? Maybe. I don't know. But here's the gig. Turn to the fibs. The fibs are telling me we have more to go. If this is just sub-minute wave 1 of minute wave 3, we have a lot more to go. Then we get a 2, and we can do that tomorrow. We can do it overnight. We get a 3, which I believe will happen during expiration. And that'll come down. So I'm not looking for a higher expectation, but lower. And then we get a wave 4. And then we get a wave 5. And then we're talking. We've completed. Those are all sub-minute. 1, 2, 3, 4, 5. And then we'll be done with minute 3. Then we get a 4 and a 5. And then we'll be done with minor 3. Then we get another 4 and a 5. And then we're going to be done with intermediate wave C. So you're going to see we're just going to stair step our way down all the way. But hopefully, because right now it truly is following through and is clean. I mean, yes, I made my adjustment on the count, right? Pulled this over. Oh, where's that 4? 4 is going to be right there. Sorry, I got rid of it. Didn't mean to. Let me put that in. Make it look right. So the 4 and then the 5, I did make my adjustments. And thank you. I'd have to go back and find out exactly who it was, but somebody did. I believe they were from Italy, to tell you the truth. Suggest that to me. And I'm like, I see it. So I'm going to put that in. So it's 1, 2, 3, 4, 5, wave 1, A, B, C, wave 2. Nice and clean, actually. No worries about, oh, what about this, this, and that. So as I've said many times, I got to wait for the market to let me out. If I had to interpret it like that, I can, and you saw it. And it did work. But it left open what comes next. Now, I had thought, okay, if indeed that's only A, and we're doing a B, and we're going, or this is A and this is B, and we're running up in a C wave 1, 2, well, that would have been it. But it turned into an ABC. Still ended the second wave, which all we were counting here. So no matter what, while I didn't get as high, it did get above 12,300, and that was up there in our resistance. How it got there, I arranged, not that I did not arrange, the market made clear, and then I adjusted the count, the labeling. The count itself remained the same. I was looking for a minute wave 2 high, got it, and then the next step, confirmation, yep, it's in place. Look at what they just did. And I will continue to say, I cannot tell you specifically what's going to be pulled in and be a catalyst for the next drop. I think just a continuation of what we already have is strong enough to do it. So we'll see. Now, we can look for fourth wave. And initially, let me take some of these off, folks, because I want to see these. Initially, I would eyeball it. If this is going to be a 1, we're looking for a small 2. We have resistance at 12,073, 12,108, and then 12,158. So we can get up into there. We're back pushing against fib resistance, which was support on the way down. Now can be resistance on the way back up. And then that could be a 2. And then we roll into 3 of 3. And I'm not joking. I think that 3 of 3 can just be let go, let loose. And it could happen. So I would be paying attention to those. Then you can add one more like we just did. You put in these, oh, come on, the next level, back on. Oh. All right, so let's try that again. A, B, C. And then you have those, and you have pretty intense. It's all kind of bunched up. For the third, it's already way beyond. Oh, that's too tight, so it's already way beyond. But I can get rid of that and go back to there and put that. I was going to try to tighten it up for that simple third, but we already overshot it. We're already down to 100%. But we know we're moving down lower. So we get a bounce and another drop. So the third wave is going to be pretty spectacular. I kind of got a feeling. The only way I can really do this is to say that the first wave is the extended wave. We don't know. All right, moving averages are all kind of pointing very nice and clean on the hourly. Let's go up and look at the daily here. On this chart, yeah, did. Let me just, again, let me remove that so I can see the moving averages. All right, you can see them. What's left, it's resting, closed right at. So what we're looking for is for it to open and to break back below the 200 SMA, daily 200 SMA, negative picture, building on the daily. We should be breaking there momentarily. All right, next update, unfortunately, will be on Sunday. And that will be March the 11th. And so have a great trading day tomorrow, folks. Stay on your toes, keep your mindset strong, and look out below. Next update will be on Sunday.